So let's talk about 5 different accounts that you should have as a business owner. Okay. Especially when you're taking your side hustle, right, to full time, right? And you got your expenses set up in a way where you have your personal separated from your business. Now, I just did a video recently on the new tax bill that's going to be happening in 2022 for anybody who's using apps like PayPal, Venmo, or even Cash App, Zelle, things of that nature, how they're planning on taxing anybody who's making over $600 in transactions. Okay. No minimum transactions, just over $600. So the first thing that you need to do is you need to make sure that you separate your business expenses and your business income from your personal income, especially if you still have a regular job. Even if you don't have a regular job, you should still have those two things separated, because you want your personal expenses coming out of your personal account and you want your business expenses coming out of your business account. So with that being said, let's talk about the 5 different accounts that you should have, right? Or that could help you when you're going forward. So when you go open up your business bank account, you can open up multiple bank accounts as well too, right? Multiple share accounts or whatever the case may be. And so you want to have a couple of different accounts. Now, this comes from a book that I read that was called Profit First. And this is actually a model that I adopted that helped me with the financial side of things in my business. And so let me just share those with you right now. So the first account that you're going to want to have is your operating account, right? Your operating account is just like your hub. It's just like, this is where all the money is going to be coming in, and this is where all the money is going to be getting divvied out, right? So this is the money that's going to get divvied out to you that you pull outside of the business. This is the money that's going to go into your expense accounts, your savings accounts. Maybe you have a retirement account, whatever the case may be. This is just your central hub where, the money is coming in, and then it's going to be distributed to separate accounts that are going to be designed for separate parts of your business. So the first account that I'm going to bring up is your tax account, right? You want to have a tax account where you put a certain percentage of your money away from taxes. And you want to do this. And the reason that you want to do it is because if you're a freelancer, right, or you have a small business, right, you know that when you get money in, you bring in revenue into your business, that money is not taxed. And so you're going to have to pay taxes on it at the end of the year. And there's nothing worse than owing money for taxes, right? It happens, whatever. It is what it is, right? But nothing was worse than, what's worse than owing money for taxes is owing money for taxes and then not having the money. All right. And essentially, then you got to catch up in whatever the case may be. You know how it goes. Right. And so I'm speaking from personal experience, and this has helped me tremendously. OK, this has helped me tremendously. So the first thing you want to do is you want to have a certain percentage that you chop off. You put that into your tax account. Now, here's a bonus tip when it comes to your tax account. OK, because you want to make sure that this money is tough to get to. You don't want it to be something super simple to get to. You don't want it to be in an account that you could just transfer back and forth, because then the temptation is there. It's there. Believe me. I know. Okay. But that temptation is there to, hey, I need a couple of dollars. Maybe I'll just take it out of my tax savings or whatever the case may be. So at least you want to try to make it as difficult as possible to get to that money. Now, I'm not saying that in case of emergency, you got to break the glass. In case of emergency, break the glass. Okay. You got to get that money. Go get that money. But you at least want to have something set aside so that, come tax time, you have, money to cover your bills, or at least a good portion to go towards your tax obligation. But like I said, I'm going to reiterate this. Make sure that money is hard to get to. OK, I have an account set up for my taxes, and the money is difficult to get to. And it's annoying in a sense, because it's easy to put money in there for some reason, but it's like such a pain to get it out. But it's okay, because I actually need that hurdle. I need that barrier. And make sure, if you can, at all possibility, that it's an account that you're not going to see every day, because seeing it, out of sight, out of mind type of thing, seeing it reminds you that, hey, it's there, but out of sight, out of mind, just whatever mental trick you can use possible to keep that money set aside. So the next account that you're going to want to have is an expense account. Now, your expense account is exactly that. It's your expenses, right? What things are you paying for out of the business? What are expenses, right? Are you buying materials? Are you buying supplies? Are you paying for subscriptions, right? You're buying a new computer, you're buying a new camera, you're paying for, your editing software, you're paying for your website, right? You want your money to come out of this account. Now, same thing here, you're going to assign a certain percentage and you want to try to work with that percentage as much as possible. Okay. So if your percentage isn't a lot, you want to try to maybe streamline your expenses. I'm not saying that you can't go over it. Obviously, you got to do whatever it is that you need to do. But the goal is to try to work within those expenses or within that percentage set aside from those expenses, which means, basically looking at everything you have, looking at your subscriptions, looking at everything that you're paying for out of your business and saying, hey, do I need this? Do I not? Can I go with it? Can I go without? And just trying to streamline your business as much as possible. So, your expenses just aren't getting out of control and out of hand. Now, the next account that you're going to want to have, or you should consider having, is a bonus account, right? Now, the idea of this bonus account is that you always ensure that you have some type of profit in your business, right? Even if that profit is $1, you have some type of profit in your business. And I'm not so much talking about like your profit is like, well, I had to pay $100 for X. I sold it for $200 and my profit is $100. No, I'm talking about, the profit after you take care of your expenses, you assign everything else, you take everything else and put that to the side, and you have a portion of your leftover, which is an actual bonus profit that you can draw once a quarter. So even if it's $4, right, you can draw it. And the same concept works here. You want to assign a percentage that's going to go into your bonus, right? And then at the end of each quarter, you withdraw that bonus and you spend it on yourself. You spend it on something nice. So your bonus could be really big, depending on how your quarter went. You could have bought in a lot of business, did a lot of money, or did a lot of revenue. And, your bonus might buy you a trip, might buy you a vacation, or you might have had a couple of down quarters and you don't have that big of a bonus. And the way your expenses or your other percentages are set up, you just don't have that much left over. And you might go get yourself an ice cream. Okay, it doesn't matter. You just want to make sure that you always have something set aside, even if it's as small as 1% of everything that you make. And at the end of each quarter, there's your bonus. You take that, you spend it how you see fit. And the fifth account, last but not least, is a savings account. And that's going to be the same type of deal. You're going to have a percentage set aside that's going to be in your savings. Now, whether you put this savings away, like within your business, like you have your business of savings, right? So you have, money in your business, right? That you're just putting aside. You got your expense account. That's money that's going to be going out the door, right? Some of it has to go out the door. You're paying for your subscriptions. You're paying for your products, whatever the case may be. It has to go out. You're going to have money that doesn't always have to go out. And so you can put that into your savings, right? And that can just be some money that you hold there for a rainy day, or you hold it for a big purchase, or, you got to cover something that you don't have all of the money for in your expense account. You can give it a little cash injection. You probably want to try to, not touch this money as well and build it up, only because it will help you if, you have a couple of down quarters, a couple of down months, or whatever the case may be. That might be able to, weather you through. Or it could just be there for you to, create or to get a big purchase. Maybe you need a new computer. Maybe you need a new set of lights, or, office furniture, I don't know, whatever the case may be, any type of equipment. Something along those lines. If you could do it within your expense account, that's even better. But sometimes you might need it from your savings. So now that you have all these accounts in order, hopefully it will help you with keeping track of your money a little bit better, because at least, once money comes in the door, certain percentages that you're going to have it assigned out to. You kind of, you have a better idea of what you're actually going to be, pulling out of the business, what you have to work with in the business, and trying to streamline your process and really paying attention to your numbers, right? And making sure things don't get out of control. You're not pulling too much money out of the account out of your business and you have no profit left over, you're not leaving too little in so you can't cover your expenses. And you're always making sure that whatever it is that you're making, you take a percentage of that and you put it aside for your taxes. Trust me on that. So that's it for me today, guys. Hopefully you found that video useful and helpful. And if so, give me a like and drop me a comment. Let me know where you're at right now in your business journey. And for all my people out there who are trying to build a life on their terms so they can get it how they live, this is your man, Jonathan Moore, and I'm signing out. Peace.